Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURUSD because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that during all this move to the downside, only one green candle was created, which is exactly this candle here. Now, when you have a strong move with only one green candle, you would expect the market to go and retest that area because it indicates how the market was interested in that zone. And in fact, it means that it was so strong that the market created a green candle during a very strong bearish momentum. That indicates that this previous support is now turned resistance, and we have good probabilities for the market to go and test it as new supply and resistance. So from a monthly perspective, we would expect more bullish price action to develop into this area. We can also notice how we do have an impulse and a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have the 0.618, which is the golden ratio, and 0.786 of the Fibonacci taken on this monthly impulse, which are currently lining up in this area, which we have good probabilities of the market going and testing. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market has just tested and rejected this previous areas of weekly support here, turn resistance here, which the market broke to the upside, and at that point started once again acting as support here. In a situation like this, we could expect a rejection higher, which is exactly what the market is currently experiencing. Going down on the daily time frame, what do we see? Now here on the daily, we can see a very strong impulse to the upside and now the start of a correction. As we did previously after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. If we do that, we can see how we have a 0.32 and 50% Fibonacci retracements currently lining up around this area, which is a potentially strong support zone that we could expect this market to test and then to reject higher. We can also notice how by the time the market will have created that correction, we will also have this trend line lining up around this zone, which once again could make the market obviously create, for example, like a wick, a candle with a wick testing the trend line before then creating a potential reversal higher. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can notice how with the last reports we have seen a huge increase in net positioning. We went from having minus 47k net positions, so way more shorts than longs from an institutional perspective on the euro, going from 249k shorts with only 202k longs, all the way up to 105k net positions with only 133k shorts and 239k longs, so way more longs than shorts. So we went from shorts 254k to 133, and longs went from the low at 191k all the way up to 239k, so massive change, meaning that overall the institutional positioning on the euro is getting very bullish. So this potential rejection higher, if the market will go and retrace to this area, definitely seems at least a possibility. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the lifetime access price of the mentorship program. So one-time payment for lifetime access with a huge discount. Now, this is only for limited time. You can see here from the timer, there is still time to join before it goes to zero. However, spots are limited. So if they get filled before the timer goes to zero, the offer will end anyway, and the price will go back to normal. So I really suggest that you click directly here and join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.